So welcome to RANsquawk's morning briefing for Wednesday 27th of May 2009. Just coming up to 8:30 now in London, taking a quick look around the markets in UK and Europe. Very much a continuation of the trends on that much better than expected US consumer confidence we saw yesterday, which did see the US equities finish higher on Wall Street, up over 2.5% for both the Dow and SPOOs, and up around 3.25% for the Nasdaq 100. As fed through to Nikkei overnight, the Nikkei did finish up around 1.5%. That did touch around a 2-week high there. And then moving into Europe, we've seen equities open up marginally positive. We're up around 0.5% at the moment in the FTSE CAC and DAX. That in turn as well, we've seen a continued downward trend in fixed income, lower for bunds at the moment. Did briefly see a pop lower in Bund futures after we moved technically through yesterday's lowest levels at around that 119.21 mark. Also weighing in Bunds as well, or what we'll be eyeing in around an hour and a half's time, will be a new Schatz auction. The Bundesbank looking to sell 8 billion euros worth this morning. Taking a look at some news then, two positive pieces coming out in regards to the US and very much on the global front. Firstly, the NABE survey, which is being covered in US newspapers, saying that most economies see recession end at the end of this year, very much echoing what Bernanke said and much of his FOMC colleagues. We've also seen closely followed analyst in the US, Rubini. He's also followed suit, saying US slump may end by the end of the year, covered in Yonhap news agency reports. Elsewhere as well, we're very much focused in terms of sovereign ratings and rhetoric out of China recently in regards to the US. We have seen a Chinese senior official saying overnight that global financial crisis has tarnished the US dollar and will prompt reserve managers to diversify, but the US currency will maintain its dominant international role. And we did see when the European entrance, the dollar index was trading quite a bit higher, although it has pared back somewhat heading into this European session. That in turn as well, with the pair back in the dollar index, we have seen cable in the currencies stretch up to break the 160 handle on the upside. That does mark the highest level now in cable since around November of last year. In terms of another notable news story regarding the US, Reuters reporting on the FT as well, that exploding debt threatens America. Again, very much a continuation of this theme on the doubts surrounding the sovereign ratings, following that S&P move on the UK last week. The FT, they cite former US Treasury Undersecretary John Taylor, stated that the exploding US debt threatens to put the US in a fiscal position whereby the federal debt will hit 100% of GDP in 5 years and force rating agencies to take away the US's AAA ratings. Hasn't had much of a market reaction to that at the moment, but very much an ongoing theme in the back of people's minds at the moment. In terms of other news out of Europe, some commentary out of the ECB, Liikanen saying the ECB has neither ruled out further interest rate cuts nor set a floor for rates. Notably as well, he said they did not favour ECB setting a floor in the future. That did garner some interest at the European Open. And also that Telegraph piece we saw in regards to the toxic debt on German banks' balance sheets yesterday, that has been officially denied by the German regulator BaFin, according to Reuters. Elsewhere, in terms of geopolitical news, that North Korean situation, following that nuclear test at the beginning of the week and the further missile launches we saw yesterday, North Korea overnight coming out, again continuing their bullish rhetoric, saying that they've threatened to attack the South Korea region after Seoul has joined a US-led initiative to check vessels suspected of carrying equipment for weapons of mass destruction. So again, we'll be keeping a very close eye on any other further developments that come out of North Korea. In terms of UK specific news, as mentioned, with some of the dollar gains seen overnight, just paring back at the moment, we have seen cable stretch up to around the highest level since November of last year. Again, above 160 now in cable. In terms of some supportive news on that move, positive coming out of the CBI survey. Their quarterly survey sees gloom begins to lighten in terms of the service sector. That's somewhat outweighing some negative news from property agents Jones Lang LaSalle, who did say that UK house prices could fall a further 14% by the end of the year. In terms of equities, Again, not too much in terms of major specific news moving around individual stocks, more so the continuation of that theme of the positive reading from consumer confidence yesterday in the US. And take a look in the calendar, we're seeing the first of the German state CPIs reporting today. We have already seen the first state Saxony holding pretty steady in terms of the month-to-month number, the reading 0.2% in terms of inflation there for Saxony state. However, continued pullbacks on the year-on-year reading of 0.1% against the previous of 0.7. We'll be eyeing the next Brandenburg and Hesse at 9 o'clock, with Bavaria due at 11, still awaiting times on the others and the Pan-Europe German CPI. In terms of other data, 9 o'clock we'll be eyeing Italian hourly wages, but major US data today will be in the form of mortgage apps, they're due at midday London, and then no 130s today will be eyeing further information in regards to the housing sector. We'll see existing home sales for the month of April at 3 o'clock London. Other than that, we'll be eyeing the API, all inventory levels, they're due after market, and all in light of the Memorial Day holidays, we'll see the DOE numbers normally released today, they'll be released in tomorrow's session. Other than that, fixed income, I'll be keeping a close eye on further reverse auctions, both the Bank of England and Fed outright coupon purchases today. That'll be this afternoon. And following a aggressive bid to cover in the 2-year note auction from the US yesterday, again there were some concerns over that, given some of the rhetoric out of China, as mentioned, the rating agencies, and question marks on the US. Again, the 2-year was received fairly aggressively yesterday. Today, the US, they're looking to issue a further $35 billion in a 5-year note. Again, that will be due at 6 o'clock London time.